Hello there, Maverick traders. This is Rob Reinhold. It is July 24th, and we had an ugly day. Let's break it down. In this session, we're going to go through the news of the day. We're going to take a look at commodities. We're going to take a look at all the broad markets. Then we're going to throw away everything that we thought yesterday, and we're going to rescore the market and make sure that we're hunting in the right places. I've got 2 bullish setups for you and 1 bearish setup. I think that tells you a little bit of which way I think the market is likely to go tomorrow.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's go and see exactly how ugly this day was. Now look, the market started out okay. We had some mixed economic reports. We had the PMI report, manufacturing, come out slightly less than expected at 49.5. Then we got the services PMI was higher than expected at 56. Then we got a disappointing new home sales report. But all of this was with futures down a little bit. And they were down a little bit because Google came out and missed earnings and some other tech stocks missed earnings. There was a lot of pressure on tech. So even in the morning, we had about a 1% gap down. But a lot of times we see a 1% gap down, it comes right back up. Today was not the day. We saw virtually no bounce throughout the day. Dow, S&P, Qs, Russell, all down. And take a look at that move in the Qs, down 3.6%. We've had some major technical damage done. We take a look at how bad was it. We like to take a look at the advanced decline line. So it was 80%. Is this capitulation? Now, we have not had a really ugly market for really about the last 2 years. So if any of you who are new to us may not know exactly what capitulation is. Capitulation is where everyone throws in the towel when it gets so good or so bad. Well, capitulation is also to the upside, but let's talk about to the downside, where people have been holding on, hoping it was going to bounce back, and finally they say, that's it. Or their margin departments at the brokerages they're at, call them up and liquidate their stocks and positions. That is capitulation. Typically, capitulation is more like a 90% down day. So I can't say that this is like peak capitulation, but 80% down day is a really nasty day. So the big question is that over? Looking at this chart, we have no idea. There's nothing in this chart that tells me it's over. However, we're also down to just absolutely key critical levels. And a lot of times we get down to this 50-day moving average. We get what's called a pierce, where we pierce through it. We have one day that pierces through it, and then it quickly recovers and goes back above. I have no idea what's going to happen tomorrow, but here's what I do know. We close on our lows. We close on our lows. That typically means we're going to have a down move, at least in the morning. There are some news events after market that I want to talk about. So let me get through this, and then I want to get into these news things that really could change what tomorrow is going to bring. The Qs have completely broken. Now, we pointed out that the Qs were way weaker than everything else, and we said to avoid these kind of stocks, and sure enough, we have plunged below this 50-day moving average. Hardly any bounce by the end of it. This is definitely has some technical damage done. Looking at the heat map, you can see where the intensity of the selling is. The intensity is in the technology. It's in communication services. It's in the part of consumer cyclical that's leveraged to technology. Outside of that, okay, financials had some weakness. Outside of that, if you just take a look at this part of the market was mixed, was absolutely mixed. And at one point, I was watching the market and I was checking both the Russell 2000 and I was also checking the RSP. At one point, when the markets were down 2%, these were hanging out about down 0.5%. Now, by the end of the day, they gave up all of that strength and fell apart. But it's just showing you that yes, this market's a down market. Yes, it's very intense in the high tech area. The average stock is likely experiencing a mild drawdown. When we take a look at the actual scores, our scores are always very technical. This is not opinion. This is where we are technically. We're at a -1. So at this point, we've been backing off our bullishness from a +3 to +2, +1, and we've just jumped all the way down to a -1. I want to see tomorrow's candle. Now, tomorrow's candle, if it is a green candle and we close up above that 50 MA, we're going to be more at a 0 or even a +1. So I don't really want to react or overreact to this one day. Tomorrow, if we have another red day, then there's no question we're at a -1. We're absolutely at a -1. If we bounce back and have a decent green day, we're at a 0 to a +1. Let's go in and take a look at a couple trades, and I'm going to be showing you 2 bullish trades and 1 bearish trade. We have some really positive news after the bell. Now, I'm doing this about 30 minutes after the bell close, so we all know that with earnings, things can wildly change by the morning. But at this point, we have several tech stocks that are trading up 20 to 25% after hours because they just crushed their earnings report. So I want to build up a list of longs that I'm going to be looking at. And here is Infosys. Infosys is in technology. I'm not specifically looking for technology, but this chart was just so absolutely gorgeous. Run, base, we're basing up here. It could base for a little bit longer. There's no doubt that it could base for longer. If this market moves higher or at least stabilizes, there's no reason this thing doesn't go higher. This thing has completely ignored the bear market. Completely ignored it. It is marching at its own tune. The big question is, where does this go? This is an $1,800 stock. This is where we pull out vertical spreads. Vertical spreads are fantastic when trading higher price stocks. I like the 1830, 1850 bull call spread. I think that is a decent spread. If a $20 spread is a little too rich for you, then you can take a look at like the 1840, 1850 bull call spread. I think that works just fine as well. Another bull here. This is one I've been watching. It's been on my watch list. This is Palantir. Palantir had been shrugging off all the bearishness until today. Today we got whacked and we got hit hard. It closed literally at the low. So I'm not looking at this one first thing in the morning. I'm looking more at this thing if the market holds tomorrow, bounces, maybe at the end of the day I'll take a position, or maybe I'll wait until Friday for the confirmation candle to take this position. But I'm starting to build a list of things I want to get in on the long side. And you can see we've pulled back to a support point. Again, this is an ugly candle, and if we don't bounce here, I want nothing to do with this. I need to see a reversal candle. I need to see something like a hammer candle followed by a confirmation. That's really what I want to see. I want to see hammer or a doji or something. You know, a bullish harami would be acceptable. Some sort of pattern that shows me that one day of selling was actually just a really good opportunity to get in at a better price. And on the short side, I really like Nike here. I like Nike because this thing was already broken. It had already broken down from its big gap down after earnings. Remember, we've had a decent-ish market over the past, month. Nike participated in none of it. So it participated in none of the good times, and here it is breaking down below support. I'm looking at this 70 as a great little target. So I'm looking at like a 70, 72.50 if there is 250 strikes. If there's dollar strikes, I'm looking at like a 70, 72 bear put spread or bear call spread. They're interchangeable, so it doesn't really matter. Let's talk tomorrow, because this is what I really wanted to talk about. Was that capitulation? Was that so intense? Again, capitulation is where it gets so intense that everyone who is thinking about maybe trying to ride it out has either given up, they gave up, or they were pushed out by margin calls by their broker. That's capitulation. I personally don't think it was intense enough. Now, if this is one of your first pullbacks, it feels intense. I get it. But trust me, they get way more intense than this. If we had like 2 more of these days back to back, that is clear capitulation. But this day, it's an ugly day. I don't want to call this capitulation. But I do want to call some attention to the movements after the bell, because I think we have to look at these if we really want to determine what tomorrow's candle is going to be and then what Friday's candle is going to be. So if we take a look at IBM had earnings after the bell, and they're trading up. Well, they're now only up about 2%. Earlier, they were up about 8%. Big move coming back down. Take a look at ServiceNow. ServiceNow is trading up 38 points. At one point, it was trading up about 50 points. Again, that's a big move higher for a software company. And then we take a look at KLA Tencor, KLAC, a big semiconductor company, and that is trading up nicely, up about $27 a share, was up about $50 a share. If these hold on to these gains, and you can see they're already coming off their highs, if we hold on to these gains, expect there to be a much better mood tomorrow, and maybe people come back into tech. However, I still think it is dicey out there for tech. I think you need to see a lot more healing than just one day for tech to become a viable sector anymore. And I'm talking about tech, communication services, and then some of the tech consumer stocks like the Teslas and stuff like that. But if tech stops going down, I think you're going to see the rest of the market, the average stock, probably start to creep back up again. And I think that is the key to this market, is does tech stop its free fall? If tech stops its free fall, the rest of the market can actually have some decent moves and some decent gains. We do have some economic reports tomorrow. We've got advanced GDP for the second quarter. Estimates are for 2%. I don't think this number really matters all that much, other than if it's too low. If it's too low, I think the people, actually, they're going to get excited about a number that's too low because it says that the Fed is going to be more aggressive in cutting rates. I don't see much movement from these economic reports. And then we do have some earnings reports. We're in earnings season. So as always, check all of the trades you're looking at and all of your positions and make sure you know when earnings are coming. That is a market roundup. Goodbye, everybody.